Hi everybody. I think my last video about mortgage recasting confused people more than it helped them. So I'm going to do a little bit longer video and I'm going to try to get into some more of the details, and I'm going to try to compare and contrast the two in a way that hopefully helps. As interest rates go up, refinancing a loan is not as attractive of an alternative for somebody who's trying to maybe drop their private mortgage insurance or change what they've got going on. Typically when somebody does something like recasting or refinancing, the goal is to lower your monthly payment. Okay, interest rates are going up. Mortgage refinancing is not as attractive of a deal as it used to be. If you have a 3% mortgage and you're trying to get rid of your $200 per month private mortgage insurance, I'm just making up numbers, refinancing at 6.5%, 7% is actually going to raise your payment over and above what you're saving. Okay, not attractive. Mortgage recasting is not new, but it's getting talked about a little bit more because people think that they found a new option, and people always like to think that they can game a system, that they can do something that nobody else knew about. So let me go into what they both are. Mortgage refinancing, most people know exactly what that is. You refinancing your mortgage. You're paying off your old mortgage and getting a whole new mortgage. Pretty simple. If you are recasting your loan, you must have done something to make it worthwhile. You're changing the amortization schedule on your existing loan. It's only of interest to you if you have put a large chunk of money down or something dramatic has changed. Your amortization schedule, you could be 10 years in, but if you haven't really put a lot of money down or prepaid your mortgage, recasting is not going to do you any good. You're just 10 years into your amortization schedule. If you don't know what an amortization schedule is, talk to me, we'll do that. That's going to make this video way too long. So recasting is when you've done something like paid off a big chunk of your principal sooner than it was due, and then you want to re-amortize your existing loan. You're working on your existing loan. When you refinance, you're paying off your existing loan, getting a whole new loan. So let's talk about fees. We're going to compare the two. Fees on a recasting, maybe a couple $100. Okay, because all you're doing is re-amortizing. Fees when you're refinancing, it's the cost of a new loan. It could be 2%, 5%, it could be a lot of money, depending on what kind of a loan you have. Eligibility, again, you have to have done something to make re-amortizing your existing loan worthwhile, and you cannot recast a government-backed loan. So you can't recast a VA loan, you can't recast an FHA loan, you can't recast a USDA loan. If you do something dramatic, like if you have 50 grand and you want to pay it down, you can pay it down and you'll just move the last payment date up. You'll just move through the amortization schedule. Or you're going to have to refinance. You can't refinance, or you can't recast a federally backed mortgage. Of course you can refinance one because you're just paying it off. You're starting with a whole new loan. Will your interest rate change if you are recasting? No. The terms and conditions of the loan are the same. You're simply taking the amount of money that you owe and recalculating it through the same existing due date. So in other words, let's say you owed $100,000 on your mortgage, you come up with 20 grand that you want to put towards it, and you have, 10 years left on your mortgage. You're going to jump through and recalculate based off of the $80,000 that's left. Does that make sense? I hope so. Sometimes as I talk, I'm not sure I'm making sense, but I'm trying. So your interest rate doesn't change when you recast. When you refinance, of course it does. It's a whole new loan. Whatever the going rate is that you are qualified for, that's what your interest rate's going to be. Loan term doesn't change. On a recast, of course, when you do a new loan, it will. 15-year loan, I think we covered that already. Is a home appraisal required? When you recast, no. You're keeping your existing loan, you're just recalculating the amortization schedule. New loan, yes, you will have to have a new home appraisal. That might be in somebody's best interest. Like I said, private mortgage insurance, the property may have gone up, but it's going to be very specific to you and your current situation. So, drawbacks of a recast, you're not changing your length of your mortgage. If you want to go from a 30-year to a 15-year, you have to refinance. Your interest rate is going to stay the same. In this environment, that's not a bad thing because some people have lower interest rates and they can get in a new mortgage. But you're going to have to tie up some cash. You're going to have to do something, put enough money towards the house to make recasting it worthwhile. And if you know me, I'd want to talk to you before you did something like that, because the IRS basically pays your interest rate on a home loan within certain limits. You have to have the tax burden, but mortgage interest is a dollar per dollar tax deduction. So you want to make sure that if you're going to pay every month anyway, you might as well pay your mortgage company instead of the IRS, because to save the money on your mortgage and you have to give up that cash to get that savings, and then you don't get the savings because now your income taxes go up. Let's talk about that. But you're going to be tying up your cash. Lender will charge a fee to recast, but it's not as much as if you refinance. Okay, so I think I've touched on the points. I know I've spent already almost 6 minutes on this. I just want you to know that there's a difference. It's not this cool new way to beat the system that some people are thinking it is. You have to do something to make it worth your while. Probably going to go back to the lender that you're working with so we can discuss it. I do know that if you bought your house from me over the last few years, one of my lenders has gone into medical sales. He's no longer a mortgage broker. So if you worked with Zach, call me. I'll get you a new lender if you want to talk about this a little bit deeper, okay? I hope this answers questions. I hope this simplified. I know I don't do things with scripts. I just kind of go with my notes and what I know. And if this helped, great. If it didn't help, reach out to me again with your questions. I'm trying to do what I can, okay? My name is Vince Davis, Agents with Options, info at Agents with Options, West USA Realty. I think you know my contact information. You're watching this someplace, just leave me a message wherever you're watching this and I'll get it. Okay, thanks for watching. Appreciate you. Let me know what else you want me to talk about. We'll talk soon. Bye.